Tax Tuesday. Please let me know if you're here that you can hear me loud and clear or where you're coming in from. I love to see where my clients are or where everybody is. Um, you know, and yeah, so just drop me a chat if you want, if you can hear me and that where you're located right now. And if you're not familiar, I am Heather Ryan, also known as the Tax Queen, and I support digital entrepreneurs, RV entrepreneurs, digital nomads, people who are traveling, running businesses, even if you're retired, expat, whatever. I support you in your taxes and figuring all those things out. And every second Tuesday, sorry, it's tax season. I'm tired. My brain is fried. So the first Tuesday of every month, I do this Tax Tuesday to answer questions. And yeah, so I see someone here is from Tennessee. Excellent. I love it. And we got an Austin, Texas. Lovely. And hopefully the weather is nicer there than here. We got some snow on the ground this morning. So yeah, so I had a few questions. I always go through questions that I receive beforehand first, and then if there's some time, I will open it up and answer live questions if you have any. I try to keep these short so that I'm aware of everyone's time, and it's also 1 week or so till the deadline. So I'm definitely under some pressure there with my clients and to make sure they're everyone and yeah, is clear. So I'm going to dive right into the questions that I have received beforehand. Again, I only have a few, so we might keep this really short today. First question, I'm an American citizen working in Spain for a Spanish company. Last year I got married. My husband and I share one bank account and expenses. I also got laid off, so we've been living off his salary for a few months. Do I need to declare his salary on my US tax return, even though he is not an American or US citizen, right? So no, only US citizens or US residents, so permanent resident with a green card, if you're married to a US citizen and living in the US, right? So you have to have US sourced income or you have to be a US person, right? So that could be a resident, a green card holder, citizen. You live and work here even though you are not a US citizen, right? But at that point, you probably have a visa or some kind of resident card to live in the US. There's also foreign business owners who have stakeholders or whatever in the US business. And so they would have reasons to file a US tax return. But yes, you can't, if you're a Spanish citizen or French or Japanese or Australian and have no ties to the US other than a spouse, you do not file in the US. In this particular case, where there's a US citizen married to a foreign citizen or Spanish citizen, the US citizen must file a tax return. If you're married, you would file married filing separate. So that's the short answer to that question. Hopefully that answers that. But it is kind of a common question or struggle, like am I responsible, am I not, especially when you have spouses that are not US. Number two, I plan to take a simplified $5 per square foot home office in my RV. I do not use this for personal purposes. In 2025, I had to travel for work. This required me to incur RV campground expenses and travel expenses. Can I deduct the square foot for the home office and a portion of the campground, as I obviously spent personal time there, and a portion, or maybe all since I went because the job required it, travel expenses? All right. So there's a couple of things in here. I'm going to share this link. Sorry, I got two different screens on here, so if I'm looking away, I'm not just sharing that link. So that link kind of talks about travel expenses. And I just want to start off there. So travel expenses, you have to be duplicating living expenses. So normally we consider that, staying in a hotel, Airbnb, any kind of other place that you are paying extra, right? Because you already pay rent or you pay a mortgage, right, to have your house. And so now we're duplicating living expenses. That it would include like food. It could include flying there, driving there, taking a train, whatever method, a boat, whatever method you take to get to this place to travel to. Usually it also means that you're leaving your family behind. So if you have a spouse or if you have children, those they are staying back and you're home, right? So think of it that way, that we're duplicating living expenses. When you use an RV, I'm not really sure this, again, this is a question I would really work with you as an individual client, because when you say that you're required, the job required you to travel. Did the job itself require you to use an RV, right? So that would be some of the questions that I would have in response to this. So the other part to this is a home office. And the home office has two methods. And this person who asked this question asked or talked about one of the methods. So there's a simplified method, and it's $5 a square foot with max 100 square feet. So $500 deduction. It's easy, it's simple, as in the name. The IRS usually won't question it. There's no depreciation. There's no tracking, utilities and rent and mortgage and interest and real estate taxes and insurance, all of those things. It's just a very simple $5 per square foot, maxed at $500, 100 square feet. So there's that. The other method is the actual method. So you can take depreciation, you would take mortgage interest or rent payments, utility payments, repairs to the home or and it's a percentage. So if your office is 100 square feet and your home is 1,000, do the math, right? So that's the percentage of all the expenses that we're going to be able to take related to that home office. And the problem with that method is that we have depreciation. And so when we go and sell that home, we have to recapture the depreciation we took as income. And that's where it's basically, to me, I like to say you're kind of kicking the can down the road. Might get a nice deduction today or this year, but down the road, when you go to sell the home, you're going to pay the taxes on that depreciation. So you're just kicking the can further down the road whenever you might be selling that home. An RV is kind of a little trickier thing, but to me, it would be the same thing. So you can depreciate the RV, but again, you're not mixed use here. So to me, that would never be 100% used for business. And you would have to track the days you used it for business and the days you didn't. And there's very strict court cases. They do not allow the RV. Like they just say no. Because you're sleeping in it, you're eating in it, you're watching Netflix, you're sending emails, you're playing games with your family, whatever, right? You're living. So it's hard to justify as a business expense. I'm not saying it can't be done, but it's just a little riskier. So I would definitely, for this particular person who asked this question, if they came to me as a client, I would be asking a lot of questions. I'm not saying no, that you can't do it, but just be really cautious there. It's the same thing as, maybe you take the campground expenses for the nights that you're doing work, but it has to be very, very documented, good records. This is when like spreadsheets or electronic to me is better than written, but I know some people still do written, but yeah. So be here for there, really records, marking who you were with, why, what was it that you were doing, right? That required you to be there for that travel. So just to kind of recap, we talked about the home office, two methods, simplified method and the actual, taking expenses, travel expenses when you're a digital nomad or traveling using an RV or whatever it is. And that means that you're duplicating living expenses. That's really the biggest thing. Can you answer yes to that question? Then you can take your expenses. So yeah, that was a longer one, but cool. Last question that I got previous to today is from a business that I had many years ago because of connection. You're going to have basically an earnout or be a large lump sum payment. I'm expecting to receive in late May. I've heard that trusts are the best way to protect and control this money and save on taxes. My goal will be to help people my goal will be to help people. I will use a lot of it for evangelizing. Okay, that's fine. My daughter will have whatever is left. I just don't want the government to take it all. Do I need a foundation, a family trust? Okay. So there's a couple of things in here. You need a little bit of tax planning, but I think you actually need a state attorney involved because you're talking about two separate things. You're talking about passing funds down to a child. Actually, you're talking more than that. You're talking about passing funds to a child. You're talking about possibly doing charitable donations, church donations, anything like that, right? So where a foundation actually might work for that, but again, a lawyer, estate planning. So that's all estate planning. How are you going to pass money, assets down to your children or child? So that would be, to me, this question is really geared towards estate planning. And then we would have to look at it also with taxes in mind. So it would be both. But many estate planners and state attorneys will kind of keep the taxes. They have the general knowledge there. So they're going to set things up and they understand that. So that would be my first place to start, is to contact a state attorney, because I also don't know other assets or anything that you own, or what's, part of your portfolio. And then look at tax planning, and kind of work together, even if they want to, if the estate attorney says, hey, can you bring your tax planner on the phone? I'll have a meeting, or hey, this is what I'm thinking. Can you bring it to them and review it? I've done that as well. But yeah, so to me, this is estate planning. So just keep in mind, and also just reiterate, trusts actually have really high tax. So it depends on the trust, right? There's all kinds of trusts to set up. And so that's why I would speak with a state planner or state attorney, for that question. Yeah, so maybe that's not the answer you wanted, but that's what I'm gonna advise. I did see a question here. Do you have a specialty or someone you can refer us to in Vietnam? I do not know anyone in Vietnam that would do taxes. Are you talking about Vietnamese taxes? Yeah, I don't have a connection there. There are many, many countries in this world, and I just can't have connections in all of them. So yes, Vietnam is not one. I do not have a connection there, but it is a beautiful country. I actually just went there this year, or this winter, and I really enjoyed it. So yeah, I wish I had someone, but I do not know Vietnamese taxes. Is there anyone else who is live that has a question? Because I will stay on for just another minute or so. Um, and if not, then I'm going to let you guys go. I'm just going to pull up my calendar. Sorry that I'm not looking at you. I am going to tell you that May 5th, which would be the first Tuesday of May, is not going to happen. So I will alert you of that. I am taking some time off after a busy tax season and will not be available on the 5th. And so we'll push it to June 2nd as our next call. And if anyone has any questions, um, and then I can happy to answer them. But otherwise, yeah, June 2nd will be the next Tax Tuesday. If you have questions between now and then, I just recommend that you share them, right? You can submit questions at any time. So I'm just going to submit that link right here. So that's the link. So you can submit questions and they will just be added to the next Tax Tuesday, which will happen to be, like I said, June 2nd. Otherwise, I wish you a great April. I hope it is warm and sunny, or maybe like cold and snowy, wherever you are. And I will see you in June. Have a great spring.